Hey everybody, Tony at mymortgageguytony.com. I want to do the last market update video of 2021. I cannot believe that it's December and we're fast approaching Christmas and the new year. And this will be the last market update until January of 2022. So let's jump right into it. Pretty exciting stuff. Let's see here. Again, this is covering just Clackamas County proper, and if there are specific zip codes, because there's some pocket areas in each zip code that have some differing forecasts, and or other counties, I'm happy to run those numbers for you. But Clackamas County median home price 513,305. Now here's where we get into some interesting numbers, because these forecasts by Case-Shiller have been really ultra conservative, and I'm going to show you kind of why analysts that we follow are feeling that these are conservative looking forward, and then we'll touch on a couple things related to the expectation of property values over the next handful of years. But 1 year forecast is 6.48%, 5 year forecast 27%. That's cumulative, and so that median home priced home in 5 years is going to be worth $654,000, which this really plays into a cost of waiting. And I want to touch on that here really shortly. But you may have seen my last video, which was the new conforming loan limits that were released by the FHFA. Now, what that really means is that the FHFA has faith in the real estate market, because these numbers were substantial. You may recall that, and if you haven't seen it, take a look or reach out to me and I can send it over to you. But the conforming loan limit went from 548,250 from 2021 to 647,200, which is a pretty sizable jump. And what that does is it gives buyers more buying power, because now we're keeping them within conforming loan limits, which means qualification's easier, the down payment requirements are a little bit lower. And just quickly going over these, at 20% down, you're looking at being able to purchase a $809,000 home now without going into jumbo. 10% down at $719,000. I break these down in much more detail in that other video, but just touching on this, this really plays into the fact that FHFA had also recently released their price index. Now this is for conforming loan limits only, so homes that fit within this conforming loan limit. So from August to September, we saw appreciation of almost 1%, and it was actually down slightly from the previous. And then from September 20 to September 21, we saw 18.5%, massive increase, right? Year over year, big numbers. However, again, that previous year over year, so August to August, was at 18.5. So we are seeing some flattening out, which means that we may kind of have hit the apex of this crazy growth that we're in. All those things said, again, FHFA has faith in real estate, and we're seeing these really strong numbers. Now, when we jump over to Case-Shiller, these factor in all homes. So even homes that fell under jumbo. So looking at 19.5 annually, whereas the previous was 19.8. So that's, again, going from September to September, September 20 to September 21 versus August to August. And so August to August was 19.8, September to September was 19.5. So again, a little bit of flattening, but really strong. Take a look at Phoenix. Holy smokes, 33.1%. That is incredible numbers. But going back to what they're now forecasting, kind of looking forward, they also had similar forecasts last year, and we've completely blown that out of the water. So one of the things that I wanted to touch on, because it plays into the questions that I hear frequently, which is, are we nearing a bubble? Should we wait? Really, there's a number of things that point to why we're seeing these types of gains. Now, we're seeing these types of gains in not only the purchase market, but in the rental market as well. And that's simply because there's a supply and demand issue. Now, if you go back to the housing crisis of 7, 8, 9, there was a lot of belief that it was because of like toxic mortgages. The truth is that if you from 2006, 7, 8, went back the number of years that is the average first-time home buyer, kind of that 35-year-old range, birth rates were at all-time lows. And so when we hit 2006, 7, 8, we didn't have this huge demand for homes, and yet you may recall homes were popping up like crazy. There was a lot of spec building, and that led to a supply and demand gap that we're now seeing inverted. So if we go back 35 years from now, the birth rates were at all-time highs, which has led to the largest living population, the millennials, really driving this kind of real estate boom, if you will. So housing is in major demand, both purchase and rental markets. And so that's where we're seeing this upward pressure in prices. When you take a look at housing formations, again, this is one home needing to become two. This is people moving into the area or people moving out of their parents' home and needing their own home. And it's outpacing actual homes being built greater than 2 to 1. So then when we factor in the moving into the area component of this, keep in mind we're bookended by Seattle and San Francisco, which are two extremely high cost of living, high cost of real estate marketplaces. And we're not anywhere near those market values yet. So until we really start to reach those values, there isn't going to be any slowing or certainly no reversing of this pace that we're currently on. There may be a slowing, but we're not going to go backwards. And so real estate is really still an incredibly strong investment. And a great opportunity when rates are still low. But I want to caution that with a lot of the inflationary pressures that we're seeing, a lot of these supply chain issues, we're already seeing and hearing about rates trending upward. So I wanted to get into a really, really quick cost of waiting. We're just going to do 1 year. This plays it out actually for 3 years, but I just wanted to do 1 year for this cost of waiting at the median home price in Clackamas County. If we did 20% down, I'm just doing this for simple numbers. I can run this for any scenario, 3% down, 5% down. But for 20% down, current rate today is going to be in the 3.25 range, depending on qualification factors, maybe a little bit lower, maybe a little bit higher, but kind of an average rate right now, 3.25. Down payment right around 102 grand, and your total monthly payment is going to be $23.95. This is a total payment, includes property taxes, homeowners insurance, principal and interest. But when we look a year out, that down payment requirement goes up $7,000, nearly $7,000. The rate is forecasted to be 3.625. And that total payment is going to go up over $200 a month. So now it's constricting your buying power. The more that you wait, it's going to have an adverse impact on your ability to afford more. So that's just really, really quick numbers. You play this out to 3 years, and you're looking at that $23.95 home being almost $600 more a month, which is crazy. So the encouragement would be to get a plan in place. It doesn't necessarily mean that it's right now, but if you have a plan in place, the exact steps and have confidence in how to get there, then you'll be prepared when it comes time to buy a home. So again, back to what we've got going on here. Median home price, $513,305, Clackamas County. I encourage you to reach out if you have any questions or would like more customized numbers for areas that you're interested in or time periods, purchase prices that you're interested in. All right, thanks so much. Talk to you soon.